Okay, everybody, it is me, Gregory Mannarino. Today is Sunday, April 24th, 2022, and this is my newest segment of Markets Look Ahead. I'm glad to be here. I'm glad you are here. So let's talk. Let's back up to Friday. All right, so we had a stock market which fell. Dow Jones Industrial Average, nearly a 1,000 point drop, and it does seem that this got a lot of people rattled. People, let me start off with this. If you are sweating the market, maybe sincerely you should consider getting out of it. I don't know another way to put this here. Markets go up, markets go down. Sometimes they are volatile. I mean, look at what this market is dealing with right now. A cratering economy, despite the bullshit, cat shit rhetoric, that we're booming, we're doing fantastic. We got surging inflation. We got real wages cratering at their fastest pace ever. We have an energy crisis, a food crisis, a cost of living crisis, an expanding war. I could go on and on and on. So, look, people, the market doesn't always just go straight up. It's a random walk here with an upward drift. Go back and look at the market, okay? And you will understand that what I am saying is true. Now, again, considering the wall of worry, I guess, that this market is facing right now, the Federal Reserve, with their crap, how they want to get serious about fighting inflation by raising the federal funds rate, which isn't going to work. We all know that. If you've been following this blog, you're clear on. As a matter of fact, it's a joke. The Federal Reserve, by their current action, is guaranteeing that we're going to see much higher inflation. You know this. Without the benchmark rate being higher than the current rate of inflation by their numbers, 8.5%, it's a guarantee that we're going to get more inflation. Come on. Okay, so another wall of worry that the market is climbing. It's surprising that we're not down thousands and thousands of points. In my view, what is happening here, and I covered this on Friday, is a retest of the recent low in the market based upon all of this nonsense that's going on right now. The garbage, the propaganda, the distractions. Look, is it possible that we will break down below the recent low in the market? Yes, of course it is possible. And then we will reevaluate. Look, the market is an entity among itself. There's nothing like it. And we must be prepared for whatever comes our way. We must be prepared to change our thinking, to reevaluate the situation. You understand? I think you do. At least I hope you do. Because again, I'm reading through the comments, and it's not so much the comments that people place here on this video blog. It's the emails that I get. And I understand, people, really I do, that a lot of you are concerned about the market and where it's going to go. But at the same time, if you can't sleep at night because you are maybe playing with scared money or whatever it might be, you shouldn't be in this market. Maybe you should be looking at other things. Again, I think it's a no-brainer, betting against the debt, becoming your own central bank. Positioning yourself for the long game, for what is coming down the pike. And that is a meltdown, an absolute meltdown in the debt market. And that's going to change the financial landscape of the entire world. Look, there's a lot of ways to take advantage of this market. I still feel the right spots to be in are large cap, dividend paying stocks. And if you are so inclined, you trade around the positions you have by either selling puts against them, setting up credit spreads against them. If you are exposing yourself fully to one side or the other of this market without having a hedge, you're in a lot of trouble, okay? And that's maybe why some of you out here are panicking. And if you panic, you're going to make a bad decision here. You got to maintain some kind of stability, and you got to be spread out. You got to be diversified. You got to be in here for the long game, while at the same time, if you're like me, look, you all know how I play this game. I am constantly, generally, okay, I am selling puts onto the market, which is a bullish position, but I'm talking about positions here that are 20% out of the money. 20% out of the money that are expiring from 2 weeks to a month out. And if you're, for example, and you could find these all over the place online, free options calculators, you can calculate your risk. Look, if any of these trades go against you, you're not locked into them. For example, with a credit spread or selling puts, you can get out of these things. Look, like I always tell you, you got to know what you're doing. If not, you're going to get eaten alive in this business here. But anyway, look, just looking back at the market, okay, so what? So the market took a hit on Friday here. We are still off the recent lows. And it's very possible that we're going to retest these lows, like I said, on Friday. And if, in fact, we break through to the downside, what are we going to do? Are we going to panic at that point? No, we're never going to panic. We're just going to reevaluate. But understand, this channel is for people who realize the long game, which is, and all I am concerned about, I am not looking at the day-to-day, week-to-week price actions, or even month-to-month in this market. I am positioning myself, and hopefully all of you, for the inevitable implosion in the debt market. That's it. Okay, that's why we are holding hard assets, gold, more specifically silver, holding cryptocurrencies. You know how I feel about cryptos. I think the market cap is going to balloon, the market capitalization of cryptocurrencies. As the implosion in the debt market occurs, cash is just going to move. As it bleeds out of the debt market, puts pressure on the stock market, it's going to go into commodities. That's what happens. I'm going to tell you what I always say. Cash doesn't grow little cash wings and just fly away, to money heaven. No, it just moves. It just moves from one reality into another. And that's it. It's very, very simple. Now, with that said, people, there's a lot of other stuff that's going on I want you to be aware of here. Number one, first quarter of this year, hedge funds are seeing massive inflows of cash. Okay, I don't think there's a real surprise here. And what does that tell me? Well, generally people who are hedge fund investors are smart people, and they have a lot of money, generally. I mean, the minimum investment for a hedge fund is pretty damn big, generally. So if you see, you got to keep your eyes on these things, all right? If you see a lot of cash inflowing into hedge funds, well, that should be a tell to you that there's not a lot of worry among savvy investors or rich people. All right. So that to me is a bullish sign. But again, what are we going to do, you and me? We're going to keep our eye on the S&P 500. Around 4150 was the recent low. We're still above that. Okay. If we break through that to the downside, we'll reevaluate. But until that point, look, you do what you want. I am not going to deviate from my strategy that has worked for years. I'm not going to change, okay? Because the 10-year yield remains stable. You know how I feel about that. And again, that's the long game. You are positioning yourself for what eventually is going to come down the pike while capitalizing on the market in the now. You trade the market you have. Pretty simple, pretty straightforward. A couple of other things I want to bring to your attention that I think you're going to find kind of interesting. So we all understand that the CEO of JP Morgan has been calling for an urgent $1.3 trillion funding package for the energy crisis. Okay, all right, lovely. Now, this is what we got out of our lovely Treasury Secretary, Janet Yellen. Pay attention to this. So this is what she's saying. The IMF is not set up to deal with the global multiple global crises that we are dealing with at this time. And the IMF is going to require, I'm reading this, much more funding moving forward. Now, is this a surprise to you? No. We discussed right here on this blog how they're going to continue to throw crisis after crisis after crisis at us, multiple crises at us here. Why? Again, it's a method, it's a very diabolic method to pull cash out of the future to continue to inflate. So central banks can continue to inflate. So look, we have the Federal Reserve here who's saying, oh yeah, we're going to taper, which they haven't. Oh yeah, we're going to cut back on asset purchases. They can say anything they want. In my view, they're going to do nothing but continue to inflate via another mechanism. And that is this crisis to crisis to crisis economic model, which seems to be the new norm. Imagine Greg Mannarino's shock here. Anyway, so you're going to hear from more people, okay? So now we have Jamie Dimon, we have Janet Yellen, and whoever else is going to crawl out of the woodwork here. Of course, our illustrious, brain dead president throwing tens of billions of dollars into you're funding a war. How do you feel about that? The American people are funding a proxy war, another one. I mean, and people are not up in arms. Billions of dollars being thrown, tens of billions are being thrown at it, while our economy here is in free fall, while people cannot make ends meet, tapping into their savings account, borrowing beyond their eyeballs. But yeah, let's go throw tens of billions of dollars over at a war in another part of the world. Sounds great to me. How about you? And that mechanism is going to remain in place. You see what he did? He got Congress to approve, was it 13.4 billion in initial funding, and meanwhile through the back door, another 2 billion just over the last 2 weeks, I think it's been, and more is coming. How do you feel about that? Where are the people in the streets? Where are the people? Why are they not saying anything? Because they're dumbed down sheep and they don't know any better. And this mechanism will be kept in place. As you are well aware of, every one of these crises, including COVID, which is still going on, well, they'll never let it end, is going to require more cash to get thrown at it. And what is that going to do? Well, we heard from the White House recently, oh, no. These billions and trillions of dollars that have been so far, over 3 trillion, has been thrown at the COVID crisis. Oh, but that's not the reason why you're seeing inflation. Oh, no. Look, they're going to keep lying to you, distracting you, propagandizing you. So sick, people. It really, really is. So look, in summary here, real quick, just looking at the market, looking ahead, more specifically, we're going to retest the recent low, in my opinion. If we break through the recent low, 4150 on the S&P, we will reevaluate. But look for it, people. They're going to continue to throw billions, tens of billions, trillions of dollars of cash at every single crisis that comes down the pike. And according to Janet Yellen here, the other thing, undefinable entity who's also not human, we got to fund the IMF too, because they're going to run out of cash dealing with the global, crisis situation, multiple crisis. It's unbelievable, people, really. So just be ready for anything. I know you are ready if you follow this blog. I want to hear from you. What do you think about all this? Really, all this stuff that's going on. You knew it was coming. You knew that they were going to use this crisis mechanism to throw more cash at everything. And where does it come from? We don't have it here in the United States or any government around the world. They must borrow it. And where does it come from? The central banks, who are more than willing to lend it. Do you see? I've been explaining to you, they're going to continue to inflate and inflate and inflate some more through any mechanism that they possibly can. And they're going to create other reasons, people, so just be ready for it. All right, with that said, look, kind of a long video this morning. Please share it. Please get it out there. And please comment here. And for those of you, one last time, that are filling up my email box with, concerns on this market, if you are that overly concerned, please find another thing to do with your cash because you're going to make a bad decision moving forward. Look, this market is not for everyone. If it were just really simple and easy to deal with, everyone would be in here. So just evaluate that too. Are you in here for the short run? Are you playing the long game? Are you betting against the debt, becoming your own central bank? Are you diversified enough? Or are you too deeply in things that maybe you shouldn't be involved with? Anyway, all right, I'm out of here. Love you a lot. See you in the morning.